Hey guys, Nathan Chan here. Welcome back to another Foundr interview series. And today we're speaking with Jack Zhang. Now, he is the CEO and co-founder of a company called Airwallex. We're actually here in their offices in Melbourne. I had no idea that this company existed. It's crazy. These guys are one of the fastest growing companies here in Australia right now in 2019. He's taken the company from zero to over $1 billion valuation in the space of 4 years. And he's going to be talking to you, and I'm going to pick his brain on all of this stuff, like how the hell has he done this and so much more. So thanks so much for taking the time.
Thanks, Nathan.
So the first question I ask everyone that comes on and that we speak to is, how did you get your job?
How did I get my job?
Yeah.
You mean the first job?
Well, how do you find yourself doing the work you're doing today? How did this all start? Like, yeah, we're here in Melbourne. You've got this incredibly large office. Airwallex has achieved, like, just recently a unicorn status. Like, how did it all start?
I'm obviously not naturally, born a CEO. So, but I think I always try to do different sort of things when I grew up and when I started my career. I probably started more than 10 businesses. Between sort of between 20 to 30 really.
Yep.
While I'm having full-time job, but always have different type of businesses like importing, exporting, retail, online businesses.
Yep.
I just try to do different things to see if I'm, achieve something or feel happy about what I'm doing. But really haven't really found anything that I'm really passionate about for a long time before I started Airwallex. And Airwallex is the first time that I seriously tried to make something happen. And it doesn't make any money. And in a sort of, at least sort of personally in the first couple of years. And then also for the company, which is quite interesting. So the idea was started from, while my co-founder running a retail business, and he's importing a lot of stuff from China and Southeast Asia that we had to use a payment provider to making cross-border payment. The time and taken from making a payment, also the cost. It's around 4% of the transaction at the time. So which is quite a big pain point that we have to resolve. We tried Western Union, we tried local banks, and we tried a bunch of stuff that nothing that actually worked very well. And because my background is all about technology and foreign exchange trading.
Foreign exchange. Your background.
It's kind of natural for me to find a solution to solve it. Yep. And then that's how it all started. And I'll get my CTO and I'll pull him out of the retail business he was running, the other co-founder, Max. So three of us kicked off the business, and then later on we have two other friends that joined us to officially launch the Airwallex brand. Interesting.
So you said for like 8 to 10 years you were doing side hustles on the side, right?
Yeah.
But this was the first business that you started that you were truly passionate about the problem that you were solving. Like, what happened for 8 years? I'm just curious. Like, because it's a long time to kind of play around.
Yeah, I mean, the stuff I'm doing is very different to technology stuff, right? Yeah. I've done. When, for example, I've done retail, open a specialty coffee, that's really kind of operational stuff that very tedious sort of operational work, but there's a lot of design elements and quality element involved. Yeah. That business has been doing really well and making a decent income. And I also have a, design architecture firm and project management firm, also have a real estate development company.
Oh, wow.
That generate a lot of profit on the side.
Yes.
10x my salary.
Yes.
But I never left my full-time job because that's really just making income.
Wow.
That doesn't have any technology, doesn't have any social impact. And I just couldn't, we were, back then we were thinking, we could maybe build a, 50 level residential building one day in the city. But then I'm not really passionate about that idea. I know we can make a lot of money by doing that. You know, it will take us 5 to 10 years to get there, and we know we'll get there.
Yeah.
But just never really feel, you know, you're alive while you're doing that. You know, the idea of running a tech driven, providing kind of a long-term customer value to our customers, and it's far more satisfied and interested than running a real estate development company. Even that real estate development company, from a purely sort of revenue point of view, might be, you know, a lot more than running Airwallex in the first few years. But you know, running a startup is a game of scaling, which we think eventually, you know, Airwallex will be far more successful, far more impactful, and it's a global platform. Then that achievement feels a lot more sort of satisfied than running a real estate development business.
Okay, interesting. I just want to talk about that just a little bit more, if that's okay. So I was reading that you're like a solutions architect by trade. Is that right? Your solutions?
I started with sort of finance engineering, so I was working in a fund, a hedge fund, and then investment banking, FX trading technology. So it's all kind of combination of finance and engineering, or writing code and developing trading algorithms and trading platforms to helping either ourselves, which is proprietary trading, or helping our customers on the market making side in foreign exchange trading and sort of fixed income stuff.
Got you. And all during that time, you were working full time in like as a solutions architect. You had other businesses on the side. You didn't. Yeah, that's crazy. How come you didn't go full time on those? Like what changed? Was because you weren't that passionate about them like that?
I always enjoy technology. I love running code, and those businesses I can easily managing outside of my office hours. And I work probably 16, 17 hours a day and 7 days a week. So it's even like working as a side job, I'm still putting full-time hours in there. Yeah. Working was never a sort of torture to me. It was always building stuff, and I really, I got into real estate because I really love design beautiful kind of stuff to the customers. Even that when I was doing, real estate development or project management or sort of design and architecture, the stuff we produce is always very, very different to what you see on the street. It's something that have a lot of vision in the design. And a lot of things about architecture and living and the customer experience, right? It's not just purely making money, look at P&Ls and that sort of stuff. Yeah.
Gotcha, I see. So you found this problem because one of your friends was doing importing, exporting. I can relate to this particular problem. Like for us, with our company, we charge for products or the magazine, whatever, in US dollars, but then it comes back and converts to Australian. We get pipped like 4% or whatever, with a stripe. And then, sometimes we have to buy USD back to, because we pay a lot of team members in the US, and we have to, if we use the bank or whoever, you can get between 4% on that. Yeah. And it's crazy. Even if you use like an Amex FX, you
should use us. So with us, that basically you can fire up, we call it a global account, real time. That you can connect that global account with Stripe. So instead of paying Stripe for the 2.7% cross-border that you just doing the local acquiring in the US, you essentially having an account with US bank details with your name to receive the funds, and you can bring them back to Aussie dollar whenever you want at the interbank rate. And we charge a flat sort of 0.5% on top. Yeah,
it's crazy because that's the money is made with all of these companies that do transactions. The money is made. Yes, they charge a fee, but the money is made in the exchange rate that they give.
Yeah, so we're using kind of wholesale rate we call interbank rate, which is basically the best rate you can get at that time, which is transparent. Kind of around the world, you can get that rate from Xe, Google Finance and Yahoo Finance, all that as a real exchange rate. So that we're also transparent about the fee that we charge on top instead of telling you a rate that you just don't know
the
difference between that to the interbank rate.
Yeah.
We'll tell you straight away, this is our standard price is 0.5%, and if you become a larger business and then you keep scaling, then we might be able to give you a better rate, a better sort of fee structure as your volume scaling, and it's completely free to create the global account in US dollar. You don't have to actually pay anything if you don't convert it. You can bring the money back, and that's all free.
Yeah, that's incredible. So you came out with this. You found this big problem, which I feel myself within our company, and you've got some friends together, a CTO, and you said another friend that had the retail business. Yeah.
Yeah. So Max is he's sort of taking care of all the operational sort of stuff.
Yep. Okay.
Customer success.
Yep. Okay. And then you kind of work on product, really.
So product and commercial.
Yep. Okay. And so what happened next? So you how long did it take to build the product, the first version of the product?
The first version was really kind of go-to-market. It took about a year to build the first go-to-market product. That was pretty sort of simple. I guess just solving a cross-border payment issue. Yep. And we covered a few countries, and we tried targeting the SME market, but that didn't really go well, because then we only raised $3 million in our first round, and the building the product already costs a lot of money. Now we don't have any money to go to market. Yeah. And then to build a global network that requires even more money. Yeah. So we raised another round, which is 13 million, but that only just enough for us to keep building the product. Yeah. And then we decide to, instead of pursuing the SME path, that we pursuing large opportunities that can bring us revenue growth and volume growth to get scale first. So we decide, instead of kind of promoting our web application, which you can just like log in and start operating, we build a suite of APIs and really kind of change, I guess, I wouldn't say change the company vision, but really change the direction of the company at that time from a sort of a more sort of a user sort of driven, sort of SME driven type of business, become an infrastructure company. Gotcha. That start, basically start building the infrastructure, the connectivities. And so far we have built banking connectivities with more than 50 banks around the world, to offering a lot more than just a cross-border payment. We now have global accounts. We have FX. We have market FX. We have lock FX. We have international payment, which does send. You can do sort of send funds overseas, and you can also do mass payment to many countries through our API. We're in the process. We're launching our acquiring product, which is online payment acceptance, to competing with Stripe. And we also launching our issuing product, which you can doing kind of programmatic more than card issuing to both smaller businesses and also to internet platforms like Uber and DoorDash. Gotcha. So that's really become now with the company evolved from a sort of a simple sort of cross-border money transfer or collection business to a kind of global platform that kind of touched the end-to-end process of programmatic money movement, to more and more become a cloud layer of global banking.
I see. So you've got a few different products now. Yep. Yeah. So I'd like to rewind for a second, because you mentioned when you went to market, it was a bit difficult, but you still raised $3 million to be able to fund the development of the product.
Well, that wasn't even have a product when we raised $3 million. So we had nothing when we raised the $3 million. Okay. That was just a team we put together and then the business plan.
Yep. And how did you do that? Like, if this is your first kind of tech startup, like how did you? Because it's hard, especially here in Melbourne, like here in Australia, like it's not that easy. Like, how did you raise?
I was lucky enough. I didn't raise in Australia. I would doubt that I would able to do that in Australia even today. Yeah. Me and my co-founder, we put in about more than $1 million US into the business. So that gave us the first sort of 6 months of a runway. Then we raised the extra 2 mil on top of the 1 mil, so it's kind of make up the 3 mil. Really, external investment is $2 million. That was at a $10 million valuation. That was our first round. Still a big dilution, but we were able to convince the investor. At that time, it's just really we're solving an important issue, and exactly how we're gonna solve it. So because I'm a product engineer, so that I can describing the way to solve it very, very clear. But the go-to-market plan wasn't clear at the time. I was keep sort of describing to the investor how we're going to go to market, but look back, what I've described and nothing have happened, right? So back then, the investor keep sort of asking me how you're going to go to market, how you're going to go to market. I mean, we tried to explain and different things, but then it's unrealistic, looking backwards, because that's my first time doing the startup. But lucky enough, they still believed in the team we have at the time and believe in the company's vision and believe we are solving something quite important in the global scale. They have to bet on people, basically. That was a bit of luck as well. And even with our Series A, the 13 million, we still haven't got revenue and anything sort of in scale sort of come in and just continue building this infrastructure. So we had to run the company for 2.5 years without any revenue to come in. Wow. Purely rely on venture capital investment.
Wow. Was that scary?
Yeah. So I was telling to my staff that my surviving pressure was sort of 3 to 6 months for the first 2.5 years. Yeah. It was just you always have that sort of less than 12 months runway. You have to raise sufficient capital to build a product to scale. But lucky enough that after 2.5 years, we just went from almost no transaction to now processing billions of transactions a month. Yeah. So that sort of 100x growth is just because we have spent so much time on the infrastructure. Even that it takes time to perfect the user experience. That take iterative research and development. But because of the infrastructure that we have built with all the banks, and that solving become a foundation of a lot of solving a lot of critical issues, that we're able to get a lot of large customers to using our platform, like Tencent, MasterCard, a lot of large sort of internet companies and travel companies and financial service companies that are using our product from the very get-go. Our first customer is MasterCard, right? So that we can get scale pretty quickly. Obviously, it's a painful process to building standard PCI security infrastructure and ticking all the checkbox of RFP.
Even pitching the right person within MasterCard, like convincing them to work with you guys.
Yes, yeah. And we got a bit lucky with joining the MasterCard, sort of incubating, or they call it Star Pass program. They had a sort of dedicated person to help us to navigating such complicated ecosystem within MasterCard, and we were lucky, and MasterCard decided to make an investment in us. So in our sort of 30 million Series A round together with Tencent and Sequoia. That really kind of a game changer for us because we got some of the best investors in the world willing to backing us, even without a revenue coming in, which is a big deal for us at the time. And we can keep attracting talents into the company, leveraging the brand of Tencent, MasterCard, and Sequoia to keep building our global infrastructure to a stage that we can scale.
I see. So. Talk to me around the early days getting your first, you were doing the seed. Well, you did the seed, the 3 million, and you said you raised from the US. Who was?
No, that was from some sort of Southeast Asia and China investor.
Ah, okay.
So that was the first round. Was the biggest investor that kind of well known is probably Gobi Partners. So Gobi have managing close to $1 billion probably between Southeast Asia and China. They also managing the Alibaba Entrepreneur Fund out of Hong Kong. The other two are pretty, you know, I guess not famous investors.
Got you. But still, I'm curious to hear, like, what advice would you have to anybody watching or listening that have a product that is purely disruptive? It can be scaled globally, like Airwallex, and incredible team, incredible vision. They believe that there's something there, deep problem that need to be solved, and it's quite expensive to build the product, and they need to raise capital. What advice would you be giving, especially first-time founders? Like, I think it's really difficult to raise first-time founders. People are looking for people that have failed or done it before, or
My personal experience, is full of luck, really. But also we're putting incredible amount of effort to the business in the first 12 months. Me and my co-founders, we sleep in the office every day. We're working 20 hours, all four of us sort of doing product or cutting code. That sort of intensive obsession of what we do is very, very important. So what I really believe that when you actually put in that amount of effort, there's potential returns that you may not anticipate it. That you're able to, once kind of you've done that, you're able to genuinely, when you talk to the investor, they can feel your genuine passion about this such critical, important issue you are solving. That honesty, that genuine transparency about how you want to solve it. And you can describe it in the detail because I actually engineered the entire sort of platform. So I know exactly from here to here to here, how exactly step by step it will happen. Yeah. So I'm describing a problem we will be solved in 12 months, but I'm able to articulating exactly how to get there. It's not like you just tell them we'll get there in 12 months, but it's like, this is how it takes. This is the team we're gonna need to. This is the solution we're gonna put together. And why this is such a large opportunity? Why is it such an impactful thing to internet business and to help those businesses to scale globally? First of all, it have to be a large scale issue. Otherwise, the investor wouldn't bet on so much money on if the market say is $100 billion. And then they wouldn't spend that much money on solving $100 billion business because we're solving, hundreds of billion or even $1 trillion plus sort of market, and that kind of giving the investor a room to kind of imagine, how big this opportunity could be, and why you need a bunch of people with this sort of scale to solve it, and why it's so important. To invest in sort of such thing. Basically, early stage investor would take a bet on you. On people, I would say the CEO is the most important person. I would say, most of my investors who come back, I was talking to Tencent. I'm like, look at back. I mean, why you would invest, right? I mean, there's such a risky. Even me thinking back, such a risky decision. And in my board of directors from Tencent was laughing. It's like, I don't even know I'm going to invest today to taking such a sort of brave decision. It's because 30 million without revenue is a big investment. But now in fintech, it's become common. Back then wasn't common at all. Now you get people raising 20 million pre-revenue all the time in the US and Europe in the fintech space. Yeah, because of the regulation, the licensing, there's regulatory compliance, to set up a fintech business in a regulated environment is very different to setting up a normal sort of e-commerce business that don't have those burdens, and it requires a lot of money to do that. Even the first license took us a year to even launch anything.
Wow, that's crazy. So I'm curious around when it comes to raising enterprise value, because you said that now it's not uncommon for a fintech to raise 20 million pre-revenue, but that was only 4 years ago, right? Like the speed of growth and scale that you guys have achieved in a short period of time is very impressive. So one thing that strikes me is you as a founder and CEO, you must be very skilled at raising enterprise value, because I said at the start, you guys are now valued at over $1 billion. Like what advice would you give to founders that have raised capital? What things should they be thinking about to raise enterprise value of their company? Because that's what it's all about, right?
I never thought about valuation, to be honest.
Really?
I even at this round, I never cared about valuation. My next round is probably the round I'm starting to care about valuation. So it's always about what other value they can add to my business. So that's why we got Sequoia, Tencent, and Mastercard to invest in us in a Series A round, and exactly the same investor invest in the Series B, and with extra funding from Horizon Ventures and Hill House. The value that sort of Hill House can bring is going to be massive before we IPO, and Horizon Ventures is the most reputable fund in Hong Kong, which we're having a lot of business in Hong Kong. So it's just a lot of strategic decision, with Visa, Master, with Mastercard and Tencent is also a lot of strategic relationship there, not just purely financial investment. For example, that Mastercard helped me a lot with building the banking connectivity network. Not saying they would help me do the work, but they just introduced me, to the bank CEO, for example, that generally would took a long time to meet those bank CEO. But fortunate enough, I was able to attend a few conferences with 50, 60 bank CEOs around the world in a single room, and presented to them about Airwallex, and they can feel my passion, and then they try to kind of build that sort of connectivity for me, and then just speed up that whole overall scaling process, because building a banking partnership is a very, very difficult process and could be very, very slow. Yeah. But we're able to build more than 50 banks relationship within 4 years' time, which is something I haven't seen in other businesses.
Yeah, no, it's incredible. So you've been very strategic with the investment partners that you've brought on, because they've allowed you, not just from a money standpoint, but from a connection and relationship standpoint, add value to the product, which has allowed you to scale.
Yeah, so a lot of investors ask me, the first question asked me, or the last question asked me, what's your valuation? I said, I'm gonna raise this amount of money. I don't know what my valuation is. You can tell me what valuation. I mean, because at Series A, I'm pre-revenue. What is my valuation? It's, I want to raise this amount of money, and obviously I'm not gonna diluting for 30%. So it's kind of you working backwards. It's like this is the money. Say you want to raise 10 mil, I want to diluting 10%. My valuation is 100 million. It's about who want to pay that 100 million. All you're kind of thinking is about finding the who rather than, to kind of negotiating valuation. I never negotiate valuation.
Yeah, wow.
Yeah.
Okay. Interesting. So I want to switch gears and talk about building a startup here in Australia. Even from a talent perspective, you guys have offices around the world now, but talk to me about the early days. You said you were living and breathing this thing, working 20-hour days, sleeping in the office, but still, it's incredibly hard to find great talent, great developers. Talk to me about that. How have you navigated that?
Yeah, so in the early days, it's a mandatory you do pay card to join us, right?
Say that again, sorry?
You have to do a pay card to join us. Okay. Which not many companies are manageable to do in Australia, but we did that. Yeah. Even now, there's people doing 50% or 70% pay card to join us. There's kind of when you talk to other founders in Australia, people are saying it's ridiculous how you kind of do that. But we as a founder, I was able to persuade the sort of our employee. We building something quite socially impactful, and is such an important infrastructure in a global scale. There's no such opportunity in Australia before to building such impactful things, and then backed by the best investors in the world. That just resonate with someone, but obviously someone just completely don't believe it, and I think he just talk bullshit. But it's if people resonate and sort of then people join us and they really engage with the company. We obviously have gone through a lot of churns in people, but I would say the most sort of valuable member of Airwallex have never sort of left. I mean, it's always kind of from the very beginning. We incredibly kind of good at retain the good people. We try to keep them around, and obviously when they join, they do a kind of big pay cut. We try to every 6 months we do a review and we give them a small amount, but a meaningful increase to sort of kind of giving them the recognition of their contribution to the company. And obviously that we have to be managing the skill very, very fast, because if you kind of slow down for a year and then people were thinking, what is the upside and that sort of stuff, then that might creating, important sort of employee to leaving the company, but you have to get that, our valuation get 3 to 5x every year. So that sort of momentum able to kind of help us to hiring people with kind of a quite conservative salary, but a lot of good talent. That's just, I still thinking that the people willing to take a massive pay cut to join you are still the most fundamental kind of people that really believe in the vision. Why people would join you, right? I mean, there's money, there's upside, there's people like, think about upside, but they also truly believe in the vision. I mean, I think a lot of people that did a massive pay cut is really believe in the company vision.
You do like ESOP too, though, right?
Yes.
Yeah. Okay. So
ESOP is obviously a massive part of our package. It could be, a lot more than the cash component we're offering to people. But we found it very difficult to tell people about ESOP in Australia.
Really?
What exactly it is.
Why?
People just don't understand. It's not a common thing in Australia, and there's no such success in Australia before, right? So apart from Atlassian is probably the only company who have got a successful exit. But what other companies got that sort of 100x, 200x exit in Australia before? There's not many.
So talk to me around kind of, you said that it is difficult to maintain good talent with the speed and scale that you guys are growing and trying to move. Like, what have you learned? Like when somebody for us, we're at our company, we're hiring and we're bootstrapped. We're trying to hire 1, maybe 2 people a month, and that's that alone is it's a lot. So I'm curious, anything that you could share that you've learned around kind of this blitz scaling, that Reid Hoffman talks about when it comes to blitz scaling. I'm not sure if you read that book, but even hiring people that aren't even really that great, because you just need so many people because you're trying to move so ridiculously fast and take the market.
Yeah, so there's roles that you could compromise. There's roles you couldn't, right? So it's getting that first sort of 10 engineers, getting the fundamental core people of your company is very, very important, that you can't compromise. Because once you get those core people, those talent will attracting talents, right? So that's very important. So if you kind of start compromising on your senior management and they are attracting sort of that kind of a multiply effect, I think that's very, very bad. I think one of the things we did extremely well is to get the very top talent to join us with a massive pay cut and believe in the company vision, the upside of the company. And we were able to prove to them that it's worth for that sort of short-term sacrifice on cash, but there's a very big opportunity to rapidly scale the company and their career, and that not just the financial. I mean, for these sort of top talents, right, the financial side is the last thing they look at it. And most of them already achieved financial independence. So, if you look at it, probably half senior management don't even consider money as an element when they're choosing a job. They look at the 2 important things. The first thing is this something they really passionate and they actually happy to work there. Obviously, the happy are kind of constitute of many things, right? Whether you are get value, that you are impacting and you're doing really interesting stuff and solving a very big problem. But the other thing is about the scope of the work that you you could be doing. Like whether you have a very large sort of global scope, or you have a very large vertical or market scope to scale your team from 1 person to 10 person to 20 to 100 in a very short period of time, and to achieve something that sounds like impossible. We're growing from like 80 people to 320 people within 12 months. That sort of scale is very interesting to some people, and the money is the cash is the last thing that you just need to give them upside. So when the company succeeded, that you align everyone's success with the company's success. So we keep having very aggressive sort of short-term incentive and long-term incentives to offer to employees and then management. I think that's the 3 sort of key things I would say.
How do you make sure the culture scales?
That is difficult, because if you want us to scale the culture, you have to have the people in the top management that understand scale. So it's very important at some stage of your company to getting people from other startups who have done it before. That kind of mix with your original employee who hadn't done it before. That mix is very important for your organizational scaling, because those people who have done it, who have scaled from 1 to 10, 10 to 1,000, can bring those experience to kind of demonstrating how to scale the company. And because you hire very intelligent people, and your founding team are very intelligent, you can learn very quickly and mix up with those people then to build a scalable organization.
I see. And like when it comes to some people that haven't been exposed, especially here, like it would be hard to find people that have been exposed to this level of scale. Some of these people, they might be in, the first, let's just say, batch of 50, but when it gets to 300, 400, or even 200, there all these levels of management come in. Some of these people may not be managers. Like, what do you do? Like there, like not everyone might be a great manager, but they've been there for a while, and
that's the balance between management and the speed, right? So if your company is growing exponentially, right, then you can using that growth to overcome sort of the management issue, because the company is going so fast, people don't even have the time to think about those management issues, because you're just telling them, we need to grow 10% this month, we need to grow 30% this month, and all they try to achieve is growing 30%. Any other things is not important. So you only have one priority, which is growth. There's no, don't think about anything else. All you try to do is this one thing, you have to do it well. That's it. There's no other things you wanted to think about. But that's one element. So you have to make sure you can achieve that growth. And when you're kind of slowing down, that's where the risk could happen, right? You could just blow up, right? I mean, but when you're kind of growing, you as a CEO, you really need to thinking like year to year. I mean, now I'm thinking through the 5 year ahead. When my growth is gonna slowing down, then I know, because you're never gonna growing like 1,000% every year, right? So you kind of need to know when that's gonna come in a year and 2 years ahead. You bring those people right before that curve, so that you elevating the company's culture together, sort of matching with the company growth. That is a tricky thing that you, as a CEO, you just have to kind of have that instinct of when that will happen, and thinking really long term to keep the company accelerating, rather than, I would never want 100% growth. I mean, in 3 to 5 years time, I still wanted to achieving 300% growth. How to get there? It's about, because any product, it takes time to build a product, to launch the product, to grow the product, to scale the product. It's kind of, 1 to 2 years to that process. If you're kind of thinking about, next year, you're already too late. You really need to think about the 3 year to 5 year ahead, where that sort of extra, 100 million revenue going to come from, and then you got to do it this year. So, right now, as a company, we investing 80% of time and money on the 3 to 5 year growth, not the growth this year, next year.
Yeah, wow, interesting. Look, we have to work towards wrapping up. I'm curious more around kind of your personal growth as a founder. This is the first time you've done and scaled a company this size. Who are you learning from? Where, like, obviously you're learning from experience. Like, do you have a lot of mentors? Do you read books? Like, where are you learning this stuff? And
I think because of that, we're fortunate enough to invest by a lot of top venture capital, that there's a lot of communication and conferences for founders to catch up within the Tencent and Sequoia or DST portfolio. That kind of learn from that. And also, one of the key things I've learned is from interview. I spent a lot of time interviewing people to learn from people, whether they're good or bad. I mean, there's things I can learn. That's very important. Also, self-reflection. Just be really, really honest about your weaknesses and strengths, and try to hire people that can complement with your skill set. Is very, very important, and be extremely honest and transparent to everyone that you work with. And not just telling people the good things, but telling people the bad things, and also admit your failure and your weakness. I think is very, very important.
Awesome. Well, look, last question, two more questions. The first one is, best piece of advice or something you'd like to share with our audience, or any parting words of wisdom. And lastly, where's the best place people can go and find out more about Airwallex?
The first one I would say, to founders is, there's at the single point of time is only one priority of your company, which is get shit done and grow. Don't think about anything else. Think about anything else when you kind of have the scale. So just doing everything you can. Have that kind of, obsessive intensity in every day of your job. That's, not everyone can do it. You got to sacrifice a lot of things, but you got to ask your question: are you willing to sacrifice your house, your time with family, and everything to do that? And if the answer is yes, then maybe you are born to be an entrepreneur and doing a very fast-growing startup. And the last one is around. The last question is.
Yeah, where can people find out more about Airwallex?
So Airwallex. I'm on Twitter. I'm on WeChat. Also on LinkedIn. People can kind of contact me through LinkedIn or Twitter. More about company. Our website is the best place, and we have a career page, and we have a lot of interesting product that you can know more about Airwallex. And the rest, just Google the company story. I think there's a lot of interesting things to read.
Awesome. Well, look, thank you so much for your time, Jack. This has been an incredible interview.
All right, thank you.
Thank you.
The Foundr mission is to help you create an ass-kicking business and help you learn straight from the mouths of world-class founders. Get your free printed edition of Foundr magazine featuring Sir Richard Branson. Just cover shipping and handling at foundr.com/Branson.